Hey everyone, welcome back to Corporate Decoder, the place where we try to untangle the confusing world of corporate filings and see if Comcast is still a big deal, or just a ghost of cable past. Get ready because we're diving into a report that lays out some interesting changes at the very top and hints at future strategies. Today we're looking at a Form 8K filing from Comcast Corporation, and it is dated the 19th of December 2025. This isn't your typical quarterly earnings report, it is more about important company events that need to be disclosed quickly to the public. Think of it as a heads up on significant shifts happening behind the scenes. The big news here is about leadership, specifically the upcoming appointment of Michael J. Kavanagh as Co-Chief Executive Officer. This is a monumental shift for a company as large as Comcast, and it signals a new era is dawning. A leadership transition like this often comes with big promises and even bigger compensation packages for the key players. Before we get into the executive compensation, let's quickly look at some of the financial instruments Comcast has on its books. We see a variety of notes maturing at different times, like the 0.000% notes due 2026, and then notes with varying interest rates maturing in 2027, 2029, 2032, 2036, and 2040. This shows a structured debt portfolio with some very low interest debt like those 0.00% notes. It is smart financial management to tap into the market for funds at such favorable rates. We also see notes like the 5.50% notes due 2029 and the 2.0% exchangeable subordinated debentures due 2029. This variety in debt instruments reflects different funding needs and risks. The exchangeable subordinated debentures, for instance, offer a unique financial structure that can benefit bondholders. Now, let's talk about how Comcast stock is traded. Its class of common stock is listed on the Nasdaq stock market, LLC, under the ticker CMCSA. Many of its debt instruments are also listed on Nasdaq, which is a common practice, however. You also see some debt like the 5.50% notes due 2029 and the exchangeable subordinated debentures listed on the New York Stock Exchange under tickers CCGBP29 and CCZ respectively. This diversified listing presence shows Comcast's reach across major exchanges. The core of this filing revolves around the new employment agreement for Michael J. Kavanagh. This agreement is in place because he is set to become Co-Chief Executive Officer on the 2nd of January 2026, and it locks him in until the 1st of January 2029. These extended contracts are typical for top executives in major corporations like Comcast, ensuring stability and commitment, especially during a transition period. Let's break down the money involved. Mr. Kavanagh will receive an annual base salary of a cool $2.75 million. That is a solid foundation, but the real excitement comes from his performance-based cash bonus target, which is set at a whopping 300% of his base salary. This means he could potentially earn an additional $8.25 million purely based on performance. This high bonus potential is designed to strongly incentivize top-tier results and aligns his rewards directly with the company's success. It is all about driving that performance home. Then there is the Performance Award, a substantial grant of restricted stock units to the tune of approximately $35 million. This isn't just cash, it is equity in the company. The number of shares he'll receive is tied to the company's stock price, meaning his ultimate reward will fluctuate with the market's perception of Comcast's value. This is a powerful way to ensure executives are deeply invested in the long-term health and growth of the business. The mention of the Versant spin off suggests strategic moves are underway that will shape the company's future. This performance award is not instantly his. It has what is called a cliff vesting period of 3 years. This means he has to stay with the company for 3 years and meet certain performance goals before he gets the full award. However, there are provisions for earlier vesting. If he resigns for good reason, or if the company terminates his employment without cause as defined in the agreement, the award could vest for an additional 24 months based on actual performance. In cases of death or disability, the award vests fully either at target performance for death or actual performance for disability. This structure aims to reward long-term commitment while providing some protection for the executive in specific circumstances. Now, let's quickly glance at the exhibits. Usually these filings will list contracts, agreements, and other supporting documents here. We see Exhibit 104, which is the cover page interactive data file. This is essentially the digital wrapper for the filing itself, making it machine readable for regulators and financial data providers. It is a technicality, but an important one for transparency in today's digital financial world. Finally, we have the signatures. This is where the company officially attests to the accuracy of the filing. Elizabeth Weidman, Senior Vice President, Senior Deputy General Counsel, and Assistant Secretary, signs on behalf of Comcast Corporation. This confirms that the company is properly acknowledging its reporting obligations and the information presented in this document. Looking at this filing as a whole, the story is clear Comcast is preparing for a significant leadership transition with Michael J. Kavanagh stepping into a co-chief executive role. The large compensation package, including a hefty base salary, a massive bonus potential, and a substantial stock award valued at around $35 million, underscores the company's commitment to securing and incentivizing top talent at the highest levels. This level of executive compensation is not uncommon for companies of Comcast's size and complexity, but the specific performance metrics linked to these awards will be crucial to monitor. It suggests a focus on strategic growth and shareholder value creation, especially with the nod to the planned Versant spin. Off. The diversified debt structure also indicates solid financial planning. The strength of Comcast's future will hinge on how effectively this new leadership can navigate the evolving media and technology landscape. Will this new leadership usher in an era of renewed growth and innovation, or will they struggle to adapt? Only time and future filings will tell us that. Alright, that is our breakdown of this Comcast filing. What is your take on these executive compensation packages and the upcoming leadership change? Do you think it signals a positive direction for Comcast? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate America. Don't forget to check out our Discord community linked in the description for more discussions and insights. Thanks for watching. See you next time.